Hey everyone, John S. Rhodes here of the Rhodes Brothers. We are going to talk about Bitcoin and perhaps the biggest conceptual breakthrough that I've ever had about Bitcoin. I'm going to pass that along. Stick with me because it's going to blow your mind. Now, you may or may not know anything about Bitcoin. It's likely that you've heard of Bitcoin at least, and you're curious about what we think, and that matters a lot. We are internet marketers. We sell, we market, we create. We also do a lot with technology companies. We teach, we consult, we understand technology, we understand artificial intelligence, we understand coding. So we know an awful lot about consumer behavior. We also know a lot about technology itself and what is possible and what is not. We've also done a large amount of financial trading, so buying and selling stocks, for example. So we know a lot about the space for a variety of reasons, basically different vectors or different facets of Bitcoin, simply because we can look at it through the eyes of a human. We can look at the code. We can look at the market. We can look at the financials and come to various conclusions. So I was with my brother at the recent Nashville Bitcoin conference in 2024. So this is a short while ago. And as I was talking to him about Bitcoin and we went back and forth, what we realized is that Bitcoin is very unique in a way that no one has talked about at all. And this chain of logic leads to profound conclusions. So I want to walk through that, and then we'll walk through some other things together as well, just about what Bitcoin is, some of the issues and problems conceptually, and what that means. But it's mostly a positive story. Okay, so this is the logic chain. It goes like this. So the first thing is if you want to mine Bitcoin, in other words, if you want to bring new Bitcoin into existence, then it requires that you use energy. Now, there is no way around this. So, when new Bitcoin is mined, there must be an input of energy. So, you can imagine it in a variety of ways. It could be solar, it could be wind, it could be fossil fuels, something turning a turbine, you have a generator, but in effect, you need to have electricity. And what that means is that there is some type of commodity. There is some type of commodity that has been extracted or otherwise harnessed or utilized to ultimately give you electricity. So we have a commodity in terms of energy and power. Very, very important because we're starting with something that effectively doesn't have some crazy value because people want it so bad. There is supply, there is demand, but there is not unlimited supply and there is not unlimited demand. Another facet of this, an important one in fact, is that typically with a commodity, as the price goes up, there will be more production to meet the demand because the price is higher and the profit margins would be higher. The exact opposite holds true as well. In other words, if fewer people want, need, or desire that particular commodity, the price will drop. Otherwise, it won't sell. So, again, energy is a commodity and it is an essential, absolutely essential input into Bitcoin ultimately. So that's the first layer. The second layer of Bitcoin, making it come to life, mining the Bitcoin, are the actual miners. Now, a miner, just to keep it ultra simple for you, is that a miner is going to be solving complex puzzles. So electricity flows into a Bitcoin miner. The miner attempts, usually unsuccessfully, but sometimes successfully, to solve a puzzle, to sort of crack the code, if you want to say it that way. But really, it's trying to solve a puzzle. And as a result, you get rewarded if you solve the puzzle successfully. I don't need to go into it more than that. You can look it up. But in effect, you have these miners, which are a commodity. So you can go buy these specialized computers that mine Bitcoin. You can also think about the mining of Bitcoin from the point of view of what's known as hash rate. Again, you don't really need to know what hash rate is, but just think about that as computing power. So you can either think of the Bitcoin miners from the point of view of the hardware, or you can think of the Bitcoin miners in terms of the computing power itself, which is the hash rate. It doesn't matter if you think about the hardware or you think about that hash rate or the computing power. It doesn't matter. What matters is that is ultimately a commodity as well. So now we have two steps in the logic chain. The first step, again, as a reminder, is electricity, which comes from one or more sources of power, right? The electricity can come from a variety of sources. And then the second step in the logic chain is you're either going to have the hardware or you're going to have hash rate as your commodity, what you're actually looking at. So we have a commodity and then another commodity. You have one commodity at the source or the root, and then you have a commodity which sort of transforms or transmutes that power, that electricity, into computing power, into puzzle solving. And that's how Bitcoin, very, very high level, that's how Bitcoin is mined. Again, you can look any of this up. It's not difficult at all to understand after you spend maybe 15, 20 minutes on it. It doesn't take too long at all. But the point is commodity and then another commodity. Now, this is the mind bender. The third step in the logic chain is the following. Bitcoin itself is indeed a commodity. It's a commodity in many, many ways, but I'll keep it very simple. Gold is a commodity, and if we consider Bitcoin to be something like digital gold, it's a commodity in that sense. It's also literally designated as a commodity based on what the government has said that it is, right? So Bitcoin is not a security. Bitcoin is not like a stock or a bond. It's not a currency. It's not treated as a currency. It's treated as, from a tax perspective, Bitcoin is treated as a commodity. So you've heard that word many, many times. So the third step in the logic chain is that Bitcoin itself here is a commodity. So we have a commodity as the initial input into another commodity, that is the miners or the hash rate. So second level, second tier, second step. And then Bitcoin itself is a commodity. So commodity, commodity, commodity. There's nothing special about these commodities in and of themselves, right? Because you can use electricity in a variety of ways. You could use hash rate and you could use hardware for puzzle solving and computing in a variety of ways, right? You could use, let's say, gasoline. You could use fossil fuels for gasoline for your vehicle, for your car, for your truck, for your moped, for your motorcycle, or your boat. And you could use computing power for AI, for data centers, for cloud computing. You could use it in a variety of ways. You could use that hardware, that silicon, those chips, in a whole variety of ways. It just happens to be that they're applied toward Bitcoin. So again, commodity, commodity, and then Bitcoin itself as a commodity. Commodities are not very special. Remember, commodities, they're just not very special. Wood is a commodity. Water, very much a commodity. Air, commodity. So a commodity is nothing special. We turn things from commodities into really proprietary goods and services. We do that, and then we do things like marketing and branding. We do things like taking many types of commodities and creating something unique and special. But the odd thing about Bitcoin is that it's really not special. and yet it is. So I want you to think about that for a moment. And now I'm going to sort of drive into what gives Bitcoin its true value. But do pause and think about a commodity into yet another commodity. And you might just have or own, you might be storing Bitcoin, and yet you very much want that Bitcoin. I don't really know any person at all that has Bitcoin and just casually holds it and does not think about it, and they just set it off to the side, and they don't consider it as something that's very valuable in a huge number of ways. So it is a truly different type of commodity with unique characteristics. Okay, so we're going to pause there. Now we're going to move on. And here is what struck me. The reason that Bitcoin as a commodity continues to accrue, gather, increase in value is something very, very simple. Bitcoin continues to garner more and more attention, more trust. There are network effects, or more people believe in Bitcoin and they believe it has value. Now remember, it took energy, real work. We had to use energy, electricity, to power the miners, get that hash rate. So there's a proof of work element here. There's proof that work was done. Bitcoin was not created out of thin air. Every new Bitcoin, at a minimum, is not created out of thin air, by magic, by fiat. There isn't some dictator, some king. There is no government. There is no bank. There is no single person. There's not even some group that has determined that Bitcoin will come into existence. Energy, commodity, must be poured into another commodity, the hash rate and the miners. That must happen. And then voila, you get another commodity that has profound value to many, many, many millions of people around the world. Now, this makes me think over and over and over, why do we have value in Bitcoin? There is belief, there is trust that what Bitcoin is, although it's a commodity, is valuable. It does hold value. It is something that came into existence because work was done, energy was applied. Bitcoin stores that value. And because so many people believe this, Bitcoin has value. So you have real energy and real trust, real belief that what was done is true, it's mathematically sound, it was not done by fiat or out of thin air. Therefore, it's something we can look at and trust. Furthermore, anyone can look at what has happened on the Bitcoin blockchain. You can take a look and see what has happened. You can verify it for yourself. An individual can look at the Bitcoin blockchain and verify with their own two eyes that indeed everything from the very, very start of Bitcoin until this very second when you look is real. It's done. It's there. There's a matter of it being truthful and then immutable. You cannot go back and change the Bitcoin history. And again, anyone can look at this, and no one can go back in time and mess with the numbers, mess with the facts. They can't change what has happened. The history has been written. And what happens is humans love certainty. So they love the certainty that work has been done. It's like, attaboy, you did the work. We as humans appreciate when work has been done. We appreciate at a deep emotional level and also logically, functionally, not just theoretically, but in a practical sense, humans appreciate blood, sweat, and tears, whether it's their own, which is the highest value, or someone else's, where they can look and see that someone or something else has actually done the work. Therefore, the rewards are justified. So, commodity into a commodity into a commodity that you, as an individual or group or company, you can have, you can hold, you can keep, you can store securely. And if you would like, you can transfer that value, the Bitcoin itself, you can transfer that directly to another person without permission from anyone. So there's no need for a third party to verify or validate or do anything in any way. They don't need to handle your decision. They don't need to handle your Bitcoin. You are literally handing it over as if you're handing a piece of silver or piece of gold or a barrel of oil. I could send a barrel of oil to someone. I'd have to ship it, and then it goes through a third party, but it's somewhat similar. A better example, of course, I had already mentioned, which would be something like a bar of gold or a gold coin or a silver coin, where I just literally hand you, right? I'm giving you that coin, and then you have it as a bearer instrument. I bear it, I own it, I have it, and I hand it to you, and the transaction is complete. No third party, no central authority. No one can prevent me from doing that. You can't stop me from doing that. I can send it to you and you can receive it, and it happens in a matter of minutes. And you can send any dollar amount as well. So there are no limitations on the amount that I can send. I can send very small amounts and I can send very large amounts if I would like to do that. Again, the point here and why I'm saying these things is that people have this level of certainty and trust, and they've got 15 years, a track record of 15 years of data saying this works, it hasn't been cracked, it's not going to be cracked, eyes are on it, developers are working on it. There is flexibility, but it moves slower and slower over time. It's fossilizing, and people really like that it's slowing down. The development in its own way is slowing down because the length of time that it's been around makes every minute that goes by that much slower. Think about when you were a child. When 1 year progressed, it was 1 year. And then the next year, it's a doubling. You went from year one to year two. That's a doubling. But if you go from, let's say, 99 to 100, or maybe 100 to 101, you're moving basically 1%. And this is why, or a theory as to why it seems that time is different at different ages, right? When you're young, time seems to go slower and more is packed in. It seems like the summer takes forever. And when you get older, the summers blast by. The summers get faster and faster. As an example, the years go by faster and faster. So the exact same thing is happening with Bitcoin, is that it's in a weird way, it's going faster and it's also slowing down. It depends on how you're looking at it. It depends on when you come into Bitcoin. But there is a certain level of profound bedrock certainty that you have, and people really, really like that. But we go back to the original idea, and then we'll wrap up. The original idea, just to be super clear here, this is so important. A commodity flowed into a commodity and flowed into another commodity, and that value, the Bitcoin, energy to miner into Bitcoin, is of profound importance to a person who has taken, let's say, dollars or something else of value and then bought the Bitcoin. Here's the trick. Here's why this works. Bitcoin is capped at 21 million. First of all, there will never be more than 21 million. That is the idea. The second idea is that if you hold onto dollars, they will inflate away. So every dollar will be worth less over time. Like the march of time decays the value of a dollar. On the other hand, a Bitcoin over time, it's obviously volatile right now. Prices go up and down. There's a lot of fluidity and flexibility in the market. There's volatility upwards, volatility downwards, but over time, up, up, and away. And that is because you've got a 21 million cap and value keeps flowing into something that is of a specific and known size. It cannot be diluted. And that certainty and that trust in the network and the math and in other people trusting in the numbers, the math, and the computational power and all of the views of the blockchain. Everyone can see everything that they need to see. That certainty breeds trust, and that trust is what gives us the trust in the commodity. Let's boil this down to one idea, one key idea. Commodity, commodity, commodity. Yes. However, if you hold that final commodity, if you hold Bitcoin over time, it will accrue, it will accumulate value. More and more value will continue to pour into something that does not deviate, does not change, and has a set number. And that means that it will continue to go up in price over time, and the network effects will increase, and the number of people in that network will increase, and their holdings in terms of value ought to increase as well, assuming they don't send it or spend it. So there you have it. It's a matter of trust and integrity and certainty, and the human aspects of Bitcoin are what make Bitcoin so valuable. The faith, which is derived from certainty in the math, the faith that is derived in the true work and the inputs, the commodities that we see in the real world pouring into the digital world, pouring into what would otherwise be very, very difficult to understand and see. But we get to see the creation of Bitcoin over time. We see it because we can look at the energy, we can look at the miners and the hash rate, and then we can see the actual blockchain itself. Certainty, certainty, certainty. And that is a matter of trust, and that is humanity. It is social. And this is the profound insight of a commodity into a commodity into a commodity, that being Bitcoin. So there you have it. If you've enjoyed this teaching, this training, by all means, share it with other people. Also, like, share, subscribe here on this platform. Look in the description below. We have more teaching and training for you as well, and how to make money from these kinds of insights. Again, this is John S. Rhodes, along with my brother, Matt Rhodes. We are the Rhodes Brothers. Thank you for your time, and we'll see you in the next training. Really, really appreciate you. Take care. Have a great day.